Good morning, everyone. Welcome to the On Time, On Target Morning Brief for Invested Fighter Pot Precision on a daily basis. Today, we're going to talk about loaded mutual funds. You don't come across these a whole lot anymore because they're wildly unpopular and they're expensive. And if you're a CFP, you're a fiduciary, so you have to ask and you have to act in your client's best interest. So that rules out a lot of these things where I literally have a compliance requirement where I have to review what type of shares that my clients have, what type they hold, to make sure that they're getting the best deal and the least expensive version of that particular fund. So we're going to take a look at one today. I was reviewing this for a potential client. Don't know if they'll sign on or not, but they certainly brought up the fact that we were with First Command. They actually kind of just signed on with them. And they were starting to think a little bit better of it, and they wanted to reach out through a friend of a friend. They were a referral. And the question was, hey, how much am I really paying here? And I said, well, I have a tool that can actually answer that specifically. It's Riskalyze software. If you're a client of mine, you've heard me talk about that. If not, there's different portfolio analysis tools out there that break down, the good and the bad, right? The good being the dividend. How much dividend do I get on an annual basis for, income projection, for living off your investments in retirement or reinvesting along the way, that sort of thing. With the bad of how much am I paying, how much of my own money is going into the, either the advisor's pocket in the case of a mutual fund or, the mutual fund manager, how much is leaking out of my money, what am I paying? And so you can make an informed decision. Obviously, you're not going to pay nothing because it doesn't work like that. But, you can make an informed decision of, am I paying, the right amount for what I'm getting out of a fund. I've often said that, with any mutual fund, there is a better, if you will, or a cheaper equivalent of the same thing. So that would be the first thing I would offer to folks. But secondly, if you're putting in monthly, every time you put into a front-loaded mutual fund, you'll see on Investopedia here, it says the average is 3.5 to 5.5%. Well, I think it's 5.75 actually. That's a lot of money, right? You think of $100,000, that's 3,000 to 5,000, almost 6,000 off the top. And that's like day zero, right? So, from an investment perspective, that's, if you were to just go buy a stock, that would be like it's down 6% instantly, or 3.5 to 5.75, whatever the math holds there. But, really you want to take a look at those things. And the attractiveness, or at least the way these things are sold to people, is that, hey, you're going to pay this up front and it's going to help you with that discipline to stay with the plan. I kind of throw that under, and some people need that. So first of all, I just want to say, okay, fine. If that is you, if that resonates with you, then yeah, you might want to do that. First Command used to, back in my day when I was a lieutenant, I would call them, predatory back in the day. It was 50% up front. They'd take half off the table. And so you'd stay with your investment program. I'm like, well, I don't know. How about if I just want to stick with my investment program anyway? And how about you not take the 50%? But so I'm saying, okay, maybe there's a subset of people that's right for, but I'd say for the most part that if you are going to be a saver and lifelong investor, that artificial discipline maneuvers, is kind of like betting your friend on a weight loss program, right? If you aren't right with yourself and you haven't kind of dedicated it to yourself, then an artificial, ooh, I paid a bunch of money, or ooh, I made a bet with somebody, or, trying to trick yourself into discipline. Most people don't have a lot of success with that, is what I should say there. I'm not saying it's not right for everybody, but most people don't operate that way, right? But yeah, so that's what we're going to take a look at today. As far as that is our question of the day, as well as what's a front-loaded fee or an advisor A share. If you're in A shares, I tend to tell folks run. That's kind of glib, but get out of that stuff. It's a little expensive. So in this particular case, it's 5.9% to get into this particular fund. FAGAX is what we're going to look at today. And then it's 1.06 per year %, right? So, that's unbelievably expensive in my book. So that's what we'll take a look at. Again, for the day trading stuff today, nothing short. You can see the futures are in the green and trending greener, if you will. So we're trending up going into the open after kind of a rough day yesterday. Kind of rolled over and fell off the cliff in the last half an hour of trading. I'm sitting there working on a project, and it was just like, oh, submarine on the way down towards the end. Markets tend to bounce when you see a move like that, and in fact, it has. But we'll see today. But so far, trending up. I have three names for you: WFRD and PSTX are ones two we'll take a look at, and those are both pharmaceuticals. We have an insurance play, Tiptree, which I'm not familiar with, but TIPT is something we'll take a look at. So with that, we're going to skip the video this morning and go right on into the TD Ameritrade platform right after I have to give you my mandatory disclaimer. So we'll switch to that first, and there we go. There we go. Today, Tuesday, October 12th, standard disclaimer applies. This financial education presentation. You have to do your own due diligence for acting upon anything you hear in this program. Full disclaimer information is available at ototnow.com. All right, now we can go over to TD Ameritrade ThinkPipes and take a look at the market overall. So again, 9-month look at the S&P 500 here. Still all up trend lines, right? We're getting danger close on what are we, each of these is the trading day. So 5 means it's a week instead of the normal 7, right? So you count back 20 of these, gosh, it's been pretty much straight down for a month, right? We could go either way from here. Like I said, there are certainly headwinds. A lot of them are just political headwinds, but tax reform headwinds, which you can kind of argue those are the same thing. They're not technically, but yeah, a lot of things we need to discuss and get figured out in Q4. If you attended my investment advisory board briefing, there's lots to be concerned about that we need to work through. I think we do work through it, and I'm optimistic about 2022. But I think the money, all this money, I think has been made for 21. So anyhow, we'll see. We're going to get a down channel line here one day. We look at it every day, but we'll see. All right, here was the move yesterday that I talked about. It was kind of, up for most of the day and then back to even. And what is this last half an hour? It's just like, will it ever stop? I don't know. It just kept falling, right? So kind of went down, bounced, and it's got a lot of positive trajectory this morning. All right, there's the day trading setup. We'll be back to that in just a second. Let's take a look at the futures real quick. We'll go around the world. Refreshing those for you in the green across the board, Asia in the red across the board. Ooh, that's pretty significant. Almost 1% in Japan and over 1% in the other two major indices there. Europe red across the board. Bonds increase. This interest rate 10-year increases every day. It's insidious. It's the boiled frog thing. It's up above 1.6, maybe walking, again, 1.8 is what we saw not too long ago. So we shall see. All right, skipped oil there. Oil above 80, that is not normal. Again, 40 to 60 is the normal range. So abnormal oil generally, that can cause a lot of volatility. Gold and silver are mixed, and then crypto has been on fire lately, up to 57K on Bitcoin against 30% move in October alone. Yeah, we're 11 days in, 30% higher in crypto. And, is one of my major themes for the quarter. So, all right, that's what I've got for CNBC. Let's go back over to the day trading platform, and I'll be right back with you as I get set up. Good morning, everyone. Welcome to On Time, On Target Play of the Day. Today, Tuesday, October 12th. You have four screens in front of you. On the far left, you have the S&P 500. You can see kind of trucking higher from the market open, so a lot of positive momentum. And then we have 3 longs we're going to take a look at. WFRD is pharmaceutical. PSTX is pharmaceutical. Here's the open. And the one I like the best is this TIPT, except there's a problem. It's already up 21%. When I looked at it earlier, it was only up just outside of our normal 5 to 10% range. But the fact that it's up 23% really can't take it here. This is an insurance play. Nice big contract that they got, so good for them. And of course, their stock is being rewarded for it. So WFRD, a little bit low on the volume, looking at 10,000 shares here right at the first 30 seconds or so. And same sort of issue here on PSTX. So don't anticipate either of those moving enough to move up. I did want to check on, we get rid of TIPT because that's already kind of made its move. Wanted to check on MSTR. That's been on fire lately. So this was yesterday, the big move up. 720 peaked out above 750, kind of settled back in. Not moving too much this morning. Ethereum, ETHE. Ooh, look at that. Fell off 33 down to 3 all the way down to 31.75. That's a heck of a fall for Ethereum. Did not catch a storyline on why Ethereum's dropping like that, but we shall see. And then the last one, they're fairly new. Index ETF CRPT is right here, and not much trading volume yet this morning. All right, so we'll be done taking a look at that. There you go. It looks like WFRD finally opened and got a decent move up there, but again, nothing I think we can trade this morning. If you want to, you are on your own. All right, next screen, looking off to the left and what's up and what's down for the day, starting with what's in the green. YCBD is a CBD play, obviously. TMRC is a spec, Clickstream's a spec, Empower, Revive Therapeutics, those are also pretty speculative. That's an Apple call here. CRISPR Therapeutics, so it seems to be all the therapeutics are in play this morning. Salesforce.com, that's a pretty big holding for us, and there's some talk that Mark Benioff is going to step down as the CEO. We'll have to keep an eye on that. I do think that would hit the stock. He has been pretty much unbelievably on target as a CEO. Really impressive performance, and it would be sad to see him go. I mean, everybody moves on eventually, but we'll see if that would hit the stock. Home Depot, Lowe's in play. Marijuana, MJ in play. That's been a troubled investing theme for some time. All right, let's take a look at the downside. Ethereum, we already looked at. Cybin, Facebook still kind of selling off from its recent woes, if you will. The Saturday Night Live, if you, I don't watch it live because it's too late, but I do catch the replay of the videos. They did an interesting piece on Facebook answering, the whistleblower answering questions is pretty good and kind of informative. I mean, it is funny. It's humor first, but also don't forget that Saturday Night Live tries to address real topics through humor. And I thought it was a really pretty good skit they had at the opening there. All right, nothing else moving here of a note overall, nothing outside of the norm there. All right, let's go back to the main screen, and I will close out by talking about, okay, the fees. And again, this is the FAGAX mutual fund. You can see that up here, Fidelity Advisor Growth Opportunity A. Okay, A shares come with a front load. Here's your front load. So 5.75, I misspoke, I said 5.9 earlier. 5.75 is the front load on this. Okay, 5.79 was the statement I was looking at. So anyhow, the 5.7 range, if you will. And then the ongoing fee. So that's the maximum sales fee. And again, I'm a fiduciary, so I throw spears at this stuff like all day, every day. Advisors shouldn't be selling you stuff, right? They should be, I don't know, it's in the name. Give you a hint, starts with A, advisor, advising. They should be advising you on stuff, right? And if you are an investment manager, you should have a duty to your clients to do the best you can for them as cheaply as you can. I mean, it's just, that's 101. But for whatever reason, the financial industry still has these folks that are out there. So 5.79 up front, and then every year you get the opportunity to pay them 1.06 or 1.05%. Fantastic, right? That's just crazy in my mind. And you can see how that it does float historically. You know, it's actually, is it trending better? Yeah, I guess it just kind of bounces around. I don't see any real pattern in those numbers. So anyhow, kind of crazy. When you look into the expense ratio, how does it break out? Well, management actual and management maximum, I don't really know what that is, but 12B1 max fee means that the 12B1 fee is what the advisor gets for selling it to you. So they go home, so you have $100,000, the advisor talks you into this and you invest. They walk out the door with $57.50 that they take home and put in their own bank account. And then they get another, even if, as long as you hold this fund, they get that, what's that, $250 a year just for you holding on to that fund. I don't know. It's dirty. It's slimy. There's nothing that you can feel good about any of this stuff. That's an opinion. Make your own decision. All right. And the last one here, I'll show you. Here's what Investopedia has to say. It just tells you that you're getting sold a product, so you're going to pay up front. But the funny part is it says in here you should lower front end loads are found, and then somewhere in here it says you typically have lower fees while you hold it. It's like, oh, okay. Okay, yeah, here you go. While they leave less capital to invest because they take off that chunk out front, front end loaded funds have lower ongoing fees and expense ratios. Wrong in the case of FAGAX, the one that we looked at. They're over 1%, which is the standard, is to be just at 1% or slightly over. So you get the opportunity to pay out front and continue to pay the max through the whole time. So, that's all I'm going to say about that, because I will get spun up on it. All right. Thank you so much for checking out this morning. And so far, so good in the green market day. And we will talk to you tomorrow morning. Bye.